Hi, my name is Greg Martyr. I'm the Executive Chairman of Capital Metals. We have the Eastern Minerals Mineral Sands Project in Sri Lanka, one of the highest grade undeveloped projects in the world. Right now we're on a race to cash flow with a reduced CapEx plan and hope to start construction early next year with less than a 1 year payback on our CapEx. So stay tuned.
There's the pitch battle over. Well done, you. That's right. We're here in London, resourcing tomorrow. Used to be Mines and Money going on next door. Here it's buzzing.
Yeah, no, it's we've, as you know, we've been laying low and knuckling down. There was an election on in the last 3 months, and not a lot happening in the government phase. But we've focused on this low CapEx plan, and we've come out with a number. And it's been our strategy for a while to use this conference and to put a bit of discipline on us on timing.
Yeah.
So for us, releasing it at the beginning of the conference has actually been great because it's the people have received the message very well.
Yeah.
So it's it's a pretty subdued metals and mining market just generally.
Yeah.
Raising cash, I think, is pretty tough. The good thing is with this reduced CapEx plan, we don't need cash. So that I think has also resonated very well. So it's been it's worked to plan, and we're happy with how the week's going.
Well, I think the companies that are getting rewarded are those generating cash or being able to demonstrate near-term cash. Now you've put yourself in a position with this kind of revised approach that you come up with. Now it's come as a result of a sort of difficult position you found yourself in with partners, right? So maybe remind people of what it is that we're looking at.
Yeah.
And obviously in Sri Lanka, but not too many people know too much about that country either. So give us the backdrop for people new to the story, and we'll kind of get into the kind of commercialization of it.
Okay. So the Eastern Minerals Project, 60 kilometres of strike length on it's the easternmost point of Sri Lanka, which is sort of drops down to the southeast. And we've been there. This project's been going since 2012, and so the resource was proved up in 2016. With about 2,500 hand auger holes, so that haven't gone very deep, for about 3,400 metres, average of only 1.6 metres of depth.
Yeah.
Right? So we know that goes a lot further than that. So that we've proved up a resource. Then our company bought it from a local Sri Lankan company 2016, and we've been progressing it, got the EIA, and we've now got 2 mining licenses. So if we wanted, we could start mining tomorrow.
Right.
And so it's 17.6 million tonnes at 17.2%, which is incredibly high for the global mineral sands space. So our cut-off grade is 5%. That's above the average grade, the weighted average grade for the global mineral sands industry. Mm-hmm. We know we can reduce our cut-off to 2%, which will double our resource, but we want to do a bit more drilling, and we're going to balance it with that, and we're about to start drilling in the next 2 weeks. And that is got a target of a minimum of doubling the resource.
Right, okay. I want to come at this from a slightly more commercial angle. I want to understand the barriers and therefore risks to me as an investor coming in here. Right. First of all, let's talk about why this revised format that you come up with. Reduce CapEx.
Okay.
Why is that good for me?
So when you gave me the lead into the partners that I don't want to get into the altar dance again that we had, but that we were left at the altar by Sheffield in July, and they were going to fund all the project for a 50% interest.
The larger project.
Yes, exactly.
Right.
The larger project, not the reduced CapEx project. And then when it fell over, we sort of breathed and said, "Wow, we were about to give up 50% of that. Why don't we knuckle down and fund what we can ourselves? Find out the lowest entry point that's eminently fundable and work on that." Mm-hmm. And also, it's taken us a long time in Sri Lanka. We've had some hurdles in country, and so it's taken a while. And I think our shareholders have said, "Come on, we want to see you get in production." So that's why we knuckled down and said, "Let's get this number as low as possible." We want people to look at the number and go, "Wow, that's small," and "Wow, that's eminently fundable." And we have lots of discussions going on as to how we're going to fund it in a way that we don't need to come to the equity markets. Mm-hmm. So I think predominantly it'll come from offtake financing. So you get prepayment arrangements. So we've got 4 good conversations going on there. And we are also talking to 3 potential local partners. We've always wanted a local partner. We parked those conversations when we got into the larger MOU joint venture conversations with LB and Sheffield. And so we have revisited those, or revisited as a concept, but actually all three of these parties approached us. And they're really, really reputable parties, and so they're pretty healthy conversations. We're looking at some vendor finance from the equipment providers, so Mineral Technologies, as we're working very closely with. They will provide the kit for that first stage, the key bit of kit. And then we're also talking to a couple of groups about working capital facilities,
Right.
which you wouldn't necessarily lock. You'd lock them in, but you wouldn't draw on them until needed. And they generally want to have marketing rights as well, which we sort of want because that gives us that intermediary between the market and keeping any off-takers honest.
Okay, and we'll get into the simplicity of the process and the access to market and routes to market, etc. And with your partners, just want to deal with this in terms of, again, for the audience who've not been following this story, but it could be a nice entry point for them, which is the Sheffield. They didn't walk away because of anything technical or any issues in country. That was just a what?
So they commissioned the Thunderbird project, which is a 480 million Aussie project, which is in Western Australia, in the Pilbara.
Yeah.
And it's big discovery, a big capex, so a hell of a lot bigger than ours. And Bruce Griffin, we've known for a long time. He's the chairman of Sheffield. We're very close with them, and they actually took a placement in April and took 10% of the company, and gladly he came onto our board.
Yeah.
But they started having commissioning issues with their project, which is in joint venture with Yansteel, and they had to keep their cash to be able to fix the project. They're still having issues. It looks like they're getting on top of them. But I think he's very glad that he preserved his cash.
Yeah.
And we are too, because if we had signed the deal, he would have gone, wow, sorry, the cupboard's bare.
Timing's a great friend sometimes. Given the simplicity of what we're talking about, the process, what sort of difficulties are they coming up against?
So it's a completely different type of deposit. Like ours is a beach sand that has been washed by Mother Nature. We don't have clays, we don't have different sizes. They've had a problem with oversize. They've had a problem with their mining rates as a result, so they haven't been getting enough into the plant. Then they've just had recently a problem where they haven't been able to sell their zircon, and they sat on that for well over a month. I'm not sure exactly
different
why.
Set of issues.
Totally different.
No knock on effect for anyone else in the sector. Right, okay, let's come back.
They still want to come and have a bigger part of Capital Metals, no question.
Okay.
That's his strategy, but he's just
but we're getting on with things.
Yeah.
Demonstrate we can get on with things. So let's look at this kind of low why it's a low capex alternative here. So explain the kind of simplicity of the process for us.
Okay. So stage one is literally going to a heavy mineral concentrate. So all that involves is us bench mining and truck and shovel to a plant, which is a bunch of 36 spirals, which basically operate on water and gravity. Heavy minerals goes to the lower part. Lighter mineral stays on the outside. The lighter, nice gold yellow stuff we put back on the beach.
Thank you.
So we change the beaches. We change the beaches from black to gold, right?
Yeah.
We always say we're going to leave the beach in a better state than what it is now.
Right.
So it's a very simple process. The biggest bit of kit is 3 million Australian dollars, so it's about 2 million US. So, and that'll be provided by Mineral Technologies. When you hear that, you sort of think, well, how do you get to 20 million? Right? 20.9 million is our new capex number. Yeah. That's been reduced from 30 million. We still think there's a fair bit of fat in that 20 million, but we're not pushing too hard. Yeah, 20 sounds good. Still sounds achievable. I think it achieves our objectives. So, a very simple process. We think it's eminently fundable. We hope to start, as I said before, Q2 next year. 9 to 12 month construction. So in production by the first half of 26.
Right. So no drilling, blasting, any of that.
No chemicals.
So that's the good news. No chemicals. Yeah. It's water predominantly.
We have the big no-no in mineral sands is slimes, which is clay.
Yeah.
So it prevents it from separating. Yeah. We got less than 1%.
So cheap, quick to set up. Yeah. Talk to me about permits, licenses, permissions, etc. that you have and may need to kind of get this thing going.
So we've got 2 mining licenses in place. You have to go through the whole environmental impact assessment process, which we did. there's essentially two parts to the project. The northern part's more advanced. That's got the EIA, and we have 2 mining licenses.
And it's still covered with the new setup? Is it because it's predominantly the
Yes.
same thing, but just smaller scale? Right, okay.
Yeah, absolutely. Yeah. We could start mining tomorrow, but we actually want to shift our initial mining area a little bit to the north, which is an area of land owned by the Coconut Board.
Right. Why?
Because there's 47 hectares, really good grade.
Yeah.
It's in one landowner. We could be there for 2 to 3 years.
Yeah.
It keeps away. We can just keep honing our practices, show the constant rehabilitation.
Right, okay.
We ultimately want to be able to dredge, so we want to show how dredging works. So, that's really why we want to move. Yeah.
Literally, like all conventional sort of tin dredger type.
Yeah,
stuff, but
so
smaller,
dredging is the cheapest form of operating in mineral sands.
Not a
if
water
you can
cannon.
do it. No. Well, I mean, there are some that use it, but our EIA doesn't permit that yet. We can't go below the water table, but the rest of the world does, and we're confident we'll be able to demonstrate it. But we're pushing that off to when we get into production and demonstrate it. We don't need more complication.
Honing the art, refining the process in terms of efficiencies in a patch with, who's it, the Coconut Board, did you say?
Yes. Yeah.
Fantastic.
Yeah.
I love the idea of a coconut board.
Yeah. It's and they just have one patch. They actually have 200 hectares in our area.
Right.
And we're only starting with 47.
So they're friendly and open.
Yeah, and we're going to lease the land off them.
And this is discussions already had.
Their
right?
total revenue, they do a little bit of peanut farming. So this is the other competing use. It's not, and elephants is probably the other competing use. It's that sort of remote.
Right.
Their annual revenue is less than $30,000 a year, so we're going to lease it. Yeah, so it's another good reason to come in. We can replace that, and they're very cooperative. They've been great.
Okay, so you referenced earlier on, you're saying, right, okay, it's kind of non-dilatory approach to do this. So what are we setting on cash balances, and where are you with conversations in terms of pre-sales or offtakes, or however you want to come at it?
So the pre-sales, we're confident of getting to the position of sort of end of March. End of March is our end of financial year. Mm-hmm. We've got 1.8 million US in cash. I largely think in US, even though we raise money in pounds, and I'm an Aussie. Yeah. And so our burn rates around, with the drilling campaign going on with an EIA in the southern portion of the project, is about 150 grand a month.
You love your drilling campaign.
Yeah.
By hand.
Yeah. No, now. So now it's going to be, we're going to use an air core rig, which can go a lot deeper.
Right, okay.
A lot more effective. So
what's the actual plan? Because it seems it's pretty much it's from surface, right?
From surface, yeah.
Right.
Yeah.
So in terms of the EIA, so were there any kind of stipulations around how far you go down, how much disturbance? You talked about the water table.
We can't go below the water table.
Where's that, sir?
So the water table, it varies from sort of 2 meters to 4 meters to 6 meters.
Yeah.
So if you think about our resource only going to an average of 1.6.
Yeah.
So their low-hanging fruit is to go to the water table. So we think there's an easy double in just getting to the water table. Okay. And then we had a campaign in 2018, a sonic rig campaign, which we own the sonic rig. And we haven't put that in the resource yet. We're waiting to put that in with the pending results of the program that's about to start. That went to 16 metres, 14 metres, finishing in mineralisation. There's one hole of 14 metres at 28%. So upside has never been our issue. So we have massive resource upside. We've got grade upside. Yeah. We've got massive upside in our share price because we're in the penalty box post the Sheffield deal.
Yeah.
And so now it's up to us to rebuild the confidence. So we're trading around 2p. Our base case NPV per share is 36p. So, as I said, upside's not our issue. Our issue has been execution and giving the market
show me, don't tell me time, isn't it?
Yeah.
For you guys. So let's look at that. Let's look at the we could start building now mentality. Right? Do you think you're going to have these offtake conversations, or your sales and marketing team have got the routes into the market to get agreements signed up? Because that's what you're going to need to raise the gas component, right? Yeah. So where are we with that?
Yeah, so we were at TZMI conference 2 weeks ago in Kuala Lumpur. That's the preeminent mining conference. for Mineral Sands Conference. So we met a number of players
There's
there.
a mineral sands conference?
Yeah. TZMI is like a mineral sands specialist company. Bruce Griffin used to run it.
Right.
Which is why I call him Mr. Mineral Sands. I mean,
Okay.
what he doesn't know about mineral sands, you don't need to know.
Okay.
So very healthy, which we had started the conversations before, but these were it was face to face. So one company's already done a site visit they went over the next week. We know our product's going to be in demand. It's going to be very clean, high grade concentrate that they can easily process. So selling it, I don't think, is the issue. So. And the local partner conversations, some of those have been going on for a couple of months. I'm going to Sri Lanka on Friday, leaving the conference there for 10 days. And the other part of the puzzle, I know we're running out of time, but the other part is there's been that election. There's been a massive change in country. And so I'm going over there to meet all the new stakeholders. Haven't met the new Minister for Environment, the head of the Board of Investment, the new chairman of the Mines Department, it's called the GSMB. So looking forward to that. The positive thing that's happened, we think, is this new government's come in on the basis of an anti-corruption and anti-government largesse platform.
Yeah.
And for us, they're two huge ticks because, a couple of years ago,
we
were on the wrong end of an individual who was about as corrupt as I've seen, and I've been in a lot of exotic jurisdictions.
Yeah.
So, I mean, it's early days because there's a bit of uncertainty as to they had 3 seats before the election. They've now got 159, so more than a 2/3 majority. Mm-hmm. So who are these people and do they know how to run a country? But we're pretty confident that they're going to be we're going to be hopping into a honeymoon period where they are going to be very positive about seeing progress and seeing foreign investment and investment that creates new jobs and can increase their foreign currency.
So that's the political side, but I do want to bring back to the commercial. It's like, these offtakes, what do they look like? So me as an ex-banker, I'm going to want to have some degree of certainty, not some MOU. I want to know what's that equate to?
Right.
What are the guarantees? What do you need to deliver against that? What are the conditions, precedents? Okay.
So to put that into perspective, how it is not that complicated, and it's quite common in the industry. At 125,000 tonnes of concentrate at roughly $300, maybe a little bit more a tonne, that equates to about 40 million of revenue. What we're asking them for is 10 million as a prepayment.
Yep.
So they are only basically committing to 3 months of production.
Right.
So their risk is very low.
Yeah.
There'll be an interest rate component. We'll have to give up a level of exclusivity to be negotiated, whether it's 1 or 2 years, whether it's the full production or not. So,
and you have the concurrent debt conversations because both sides will want to. Who's going first?
Yeah. So I mean, I think what will likely happen is you'll end up with one off-taker.
Yep.
And of the 4 we've got going, there are 3 that we would definitely be happy with them as being the only off-taker.
50-50 on the debt equity ratio. You thinking would be
no equity because we then do.
Local so I'm shooting there. Okay, you're right. It's quasi debt.
Well, not top co equity. That's
that's
the key thing. The key message we want to give.
Okay, it's quasi. Right. Okay.
Yeah.
Fine. If you do that in terms of the people person, I know the Topco. You've obviously got the operations guy.
Yes. So we hired in July Stuart Forrester, who had 10 years at Aluka and 3 or 4 years at Comores. He's operated plants like this.
Yeah.
He was going to come and run the joint venture. Actually, Bruce found him, Bruce Griffin, and to our credit, he still wanted to join us even when the Sheffield deal.
Can he put the people together?
He is an amazing people guy.
He's a proper ops guy.
Really well structured, but really empathetic. But a good leader, and he's doing an awesome job of building the team. He's built a great rapport.
Okay.
Yeah.
Okay.
I'm very happy, and we the 2 of us are a good combination, so we work very well together.
Right. So, and again, coming back to that kind of commercial bit, it's really important to me because I think if you get that right, maybe 36p is where I can look up to the stars and go, okay, this is possible. Is the timing of those things? I know you're ready to go, but if you can get this money sort of quickly. Yep. Then I'm kind of all in on this thing. Again.
So as I said, March, we're targeting. I don't think we'll be quite ready by the end of March, given Chinese New Year, Christmas, etc.
Yeah.
So we say that FID, final investment decision, is Q2.
Okay.
obviously we're trying to target the earlier the better.
Yep.
So we want to tie it all up in a bow by that time. We are doing more studies with mineral technologies. Mm-hmm. We're not doing a PFS that's wrapped up in a bow for a bank. We're just doing our own style with them. And we've done a lot of studies already. We did the PEA back in May 22. So we've got a good basis. And so it'll come out with sort of a PFS equivalent without actually having somebody sign it off for it. But we're very confident with the grade that we've got. A lot of people say your best feasibility studies is just get in there and start mining.
Yeah, you can make a lot of mistakes.
Yeah.
And not worry about it.
Yeah.
And I know you.
So it's I mean,
you know what I mean.
You're not going to throw it away, but
yeah.
There's headwinds in the mineral sands pricing in the market at the moment. It's about as low as I've seen it for a while. We will still have.
Driven by what?
Well, it's mineral sands is pretty boring. It's there's a few little sexy things in titanium that might go into the aeronautical industry, but pretty much it's a GDP. If you track GDP, you're tracking mineral sands. So it's pigments are a huge part of it. So paints, ceramics. So that moves with construction, and the big thing it moves with is renovations, which I've recently learned in China, because you normally sell your house and paint it, or you paint your house and sell it, and then you buy it, and your wife wants to paint it a different colour. There's a massive trend. So you look for the renovation cycle.
Really is true, isn't it? I've never thought about it.
That's right.
Yeah.
Okay. Yeah. So even in that market, we'll have less than a 1 year payback on that first capex. So we become self-funding. We become a completely different company because you've de-risked it. And everybody says, okay, Sri Lanka has allowed you to go into production. You are self-funding. We can then increase the capacity. Our plan is to go to 1.65 million tonnes from the 550 start. Add an MSP, a magnetic separation plant, which will probably cost another 40-50 million.
Right.
And then electrostatic, which is the non-magnetic, that's the final stage. We may or may not do that, but we'll
do
be in a company
later.
that will have the choice.
We'll come back right to the beginning of the conversation and show me the money, right? Those decisions about spending money and further down, I don't care about right now. I'm like, what are we doing about the company in the equities market?
Yep.
What's going to drive those things? It's getting into revenue quickly. Even if I discount, but what you're saying with 50%, that's still a really good project.
Yep.
So I just need those kind of comforts around those contracts, that offtake.
Yeah. Yeah.
And then we're motoring.
Yeah. I mean, what we're saying to people is, we've come out of the box now. We're confident enough to say, here's the number. The reaction has been what we wanted it to be. Wow, that's eminently fundable. And you don't need our money. I'd like to play. That's sort of what we've
That's interesting. Like I've got no skin in the game. I'm not sitting as a shareholder. I'm sitting as an outsider looking in. It's attractive because it's from a low base. And I don't know what your previous shareholders from 2021 might say, but I'm looking for now as an entry point. This looks good. Yeah. Interesting.
So we will have, just to finish, so the journey to that FID decision is drilling results.
Yeah.
Right? So there's positive side on the drilling results. And I've been saying, just watch us tick the boxes as we get to that FID point, and you'll see us building confidence. That's what the plan is from here.
Off you go. Go do it. It's easy.
Thanks, man. Cheers.